Hello everybody, it's John Stiles with Apartment Cash Flow. We are about halfway through the year 2023 and I thought it'd be a great opportunity to bring you a brief market update so you can know what's going on in the multifamily world in the Twin Cities. Now for this video, I'm going to zero in very specifically on a submarket called North Minneapolis. If you're from here, you're very familiar with this area, but if you're not, well, here on the screen is a map of the city of Minneapolis. And North Minneapolis is in the northwest corner of the city. We've got the Mississippi River to the east. We've got Highway 94 just to the south. Now, when it comes to tracking statistics of this area, it's generally tracked in terms of zip code. So North Minneapolis is made up of two zip codes. On the southern section, we've got the zip code 55411. And on the northern section, we have the zip code 55412. And I find it interesting to note that in these zip codes, there's several neighborhoods which are combined to make the near north community in that southern section. And then we have several other neighborhoods which are combined to make the Camden community in the 55412 neighborhood, in zip code, I should say. And so let's take a quick look at the population in this area. So 55411 has a population just over 31,000 people. 55412 has a population just over 24,000 people as compared to the city of Minneapolis as a whole, which has a population of 425,000 people. So that means that North Minneapolis is about 13% of the city's population. This is according to RPR. Now, briefly, I want to point out the value of single-family homes in this area, even though we are talking obviously about multifamily properties, but it's just helpful to compare since they are both housing. And so in the 55411 zip code, we have a estimated home value of $243,000, and then it goes down slightly to $223,000 in the 55412 zip code, which both of these are lower than the median for the city as a whole, which is at $349,000. Now, one thing I think is important to look at is the percentage of home ownership. So in the northern section of North Minneapolis, 55412, we have a 73% home ownership rate, which is great for those people that are owning homes there. And in the southern section, it's much closer to a 50-50 ratio with 48% that own in the 55411 zip code. Now, looking at Rentometer, we can see that the median rent for a two-bedroom in the 55411 zip code is about $1,600 per month. If we look over at the 55412 zip code, the median rent for a two-bedroom is $1,251. Now, let me know down in the comments if you're experiencing rents that are different from what's up on the screen, because any of these tools that are out there that show us these statistics, they're only as good as the information that gets entered, and so it may not be 100% accurate, but let me know how this compares to what you are experiencing out there. Now, how many multifamily buildings are there in these areas? Well, for the purposes of this presentation, I'm tracking 4+ unit buildings. Even though commercial properties is technically 5+ unit properties, there's quite a few fourplexes in the area, so I do like to include those in my statistics. And so according to CoStar, we have 103 buildings in the 55411 zip code, and there's 58 buildings in the 55412 zip code. So overall, I would say this is not a lot of inventory for us to be considering, but that's what it is. Now let's look at the total number of sales. In the most recent quarter, according to the information I've tracked, which comes from a lot of different sources, mainly county data, the MLS, CoStar, any other information sources that I can get my hands on, I've been tracking sales, and there were 3 sales in these 2 zip codes in the most recent quarter. And one of those sales was one that I helped to sell. I was the listing broker agent. And so 3 sales in the most recent quarter. That's up. And if we look at CoStar, which is slightly different information, we can see that that's kind of on track for the most recent quarters and years. We did have a lot more sale volume back in the years 2013 and 14, with about 12 sales per quarter, and this was in the 55412 zip code. So that, for some reason, there was a lot of transactions in those years, and they've been much lower in the most recent years. Let's look at this in terms of sales volume. So the most recent quarter, we had $2,072,001. It's kind of funny that a property had $1 in its price tag, but I'll point to that in the future part of this presentation. If we look again at CoStar, we can see, we'll look at the 55412 zip code, just under $1 million in sales volume per quarter. And then, but not a lot of transactions, so not a lot of sales volume. If we look at how this applies to the price per square foot, we can see the most recent quarter was at $138, which is up comparatively to recent quarters. If we look at that in terms of price per unit, that's $117,000. Again, up as compared to recent quarters. And here again, we can look at CoStar information, and rather than focusing in on the specific numbers, I'd like to just point out that we did have quite a peak in the price per unit during the pandemic, and we are seeing most recently kind of a drop from that peak, and we're expecting a continued drop potentially. I mean, nobody knows how it's all going to work out, but that drop may be short-lived. So we're expecting that to be a few quarters long, followed by a drop, a bottom at some point here, and in the near future, probably within the next 12 months, and then a continued increase. And that's an interesting point why we're not seeing a lot of inventory in the overall market, although if you look at this specific sub-market, the inventory is actually up slightly. But in the overall market, which I don't have the statistic in this specific presentation, but I can tell you from my research that sales volume is down quite a bit in the overall Twin Cities market. Now, a lot of people like to take this information and see, how does this apply to my specific property? If, for example, price per door is 117, then can I just simply apply that to my property? Well, I would suggest to you the price per door is an interesting number. Price per square foot is interesting, although it more applies to other types of commercial property. But more important to you, if you're trying to value your property, is the cap rate. And so here's some cap rate information. We can see in the 55412 zip code, that cap rate was just below 8%. And cap rate is important because it is based on the income that comes from their property, the income minus expenses, the net operating income, and that's what new investors, new buyers are really paying attention to as compared to price per door. So here's a very specific example. This is a property I helped to sell just recently. It's located at 2115 North 44th, so you can look up the information online and see the specifics of this property. That's 6 units, 3 2-bedrooms, 2 1-bedrooms, 1 studio, and it did ultimately sell for $702,001. That's where that $1 came from in our sales volume. This did equal $117,000 and $138 per square foot. $117 when it comes to per door. Now, this specific property had a gross monthly rent of $7,030, so that was influencing the sale price. This allowed the property to operate at a $53,000 net operating income and resulted in a gross rent multiplier of 8 and a cap rate of 7.68%. So again, these bottom numbers are what are going to be most influential in the valuation of your property. So what is impacting multifamily sales? The macro economy. We know that we come off a period of the pandemic and economic uncertainty, and that resulted in a lot of money printing, which caused inflation, and now we have high interest rates as comparatively to what we're used to in the last few years. And that's really causing a lot of buyers to either step to the sideline or just kind of put pencils down when it comes to underwriting deals. And that's reducing, of course, the number of buyers that are interested in making purchases. We've got local policies and demographics that are shifting. There's the talk about rent control, although I will gladly tell you that the recent city council vote did strike down the rent control ordinance proposal. And so there's some good news right there, although those who are promoting rent control, they would still like to see it, and they're still going to push for it. But at least for the time being, we've got that off the table. And the population is continually shifting. During COVID, a lot of people left the inner city, wanted to find more space. They were able to get away from the office, and so we saw a lot of population shift away from the core cities. And now I would say a few years after that beginning trend, I think we're seeing more shift back into the city where people still want that urban lifestyle. And so and then investor motivations, like I talked about, inventory is low, which matches kind of the lower buyer pool. So we do have still, when a property is available, there is still a lot of demand, as long as it's priced correctly. So for example, the property I just showed you a moment ago, we had, a lot of offers. We had about nine offers and a lot of interest. So there's still, low inventory, low options to choose from. So, when it comes to investment options, multifamily is considered a very great option when it comes to risk-adjusted returns. So that's why the multifamily market is still very strong. And it's also just based on the fact that housing is just a basic human need. And so there's still high demand for housing. So if any of this stuff was interesting to you, please do like the video, comment below and let me know which other market you'd like me to highlight and share information with to you. And if you'd like more information about how this information applies to you specifically, feel free to contact me. My information is on the screen there, and I'd love to hear from you. Thank you.